Nvidia strikes again with a massive beat across the board on earnings. Revenue comes in at $35.1 billion, beating expectations of $33.1 billion, and EPS comes in at 78 cents versus the expectations of 75 cents. Price initially moved lower, but as the conference call guidance came out and remained positive, price basically recovered back to unchanged from today's close. For now, it seems like the broad market is going to dodge a bullet and remain over the previous all-time high. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got one additional trade idea to share with you that you won't want to miss. With that said, let's jump right into the charts. So kicking things off with a closer look at the SPY daily time frame chart, what do we see here from an overall trend perspective? Recall that the major daily high or low that we're looking to establish here is pretty much holding up. It's the previous all-time high retest that we wanted to see continue to hold to offer the higher low and possibly suggest trend continuation back in the upward direction towards the all-time high. As long as we're over this 586, 584.50 level, I think we're good to go from that perspective. If we think about what price has done this week, it's really not a whole lot of anything. We've started to build out more of a 4-day balance range, including the Friday session of last week, but I think it's notable that we look into what happened on Tuesday and today's Wednesday session. So Tuesday technically opens on a gap down underneath Monday's low, and keep in mind Monday is an inside bar relative to Friday's range. So if there was ever an opportunity for sellers to potentially start closing more of the election gap, it seemed to me that the gap down momentum on Tuesday could have been that opportunity. But as we'll see on the hourly chart, there was actually a test directly to the Friday low of day, a failure from the sellers to go lower, and obviously we rallied and closed at the top end of that individual range and the top end of what's now considered the 4-day balance. Now, if we look forward to today's session, the Wednesday session, of course, we opened near the highs. There's a huge liquidation break off the open from today's session, a pretty meaningful drive to the downside, testing almost an equal low. So if you put yourself in the shoes of a seller, what would have ideally been the close or continuation move you were looking for? A close at the lows of today's session, or continuation to close inside of the election gap? And if we just ask and answer the question, did either of those two things happen? The answer is absolutely not. There was a pretty firm rally into the end of day off of the lows, and we closed smack at the highs of today's session, actually over the opening print. And as we just talked about in the introduction, it's not like Nvidia is causing this nasty gap down that we have to worry about for tomorrow. So as of right now, I think leaning into just the bare bones technicals on the SPY daily chart would suggest that as long as we're over this level, we have ourselves a daily higher low. If we can break out of the 4-day balance range to the upside, we're looking to close the gap into 592.75, then potentially work our way higher. The next overhead target is around 595.25. Then beyond that, it's the all-time high, which you could consider the top end of this 4-day balance range from up here. That's at 599.25. 600 technically is an all-time high near that gap up from Monday of 2 weeks ago now. So those are your upper targets, and it does seem as though the buyers do have an upper hand here based on what we've just described from the failure of the sellers on Tuesday's gap down and today's reversal off the lows of this session. If we go ahead and throw in our 20 SMA, we have not looked at this recently, but notice that it's actually caught up with price quite nicely here at this key all-time high retest, previous all-time high retest, I should say. And the fact that we have not broken down and firmly gotten a daily close underneath that does strike me as, once again, a little bit more bullish supporting evidence. Will I have to change my tone if we open in the midpoint of range and let's just say into Thursday we break to here, Friday starts to form a lower high underneath? Absolutely, and we'll probably address that over the weekend video if that ends up being the case. But based on the evidence I can see here on the daily time frame chart, it's still bulls in control. Let's take a look at the hourly time frame chart, start to get a little bit more granular here and see what's going on. So obviously the balance range continues to persist. There's the liquidation break off of the open from this morning's session. And what do we know about liquidation breaks? This is the next step of what we should read into. Well, liquidation breaks technically strengthen the market, right? Why is that the case? Well, if this can be retraced 100%, which it was into the close, what that means is that anybody who is short, even from the best possible trade location, basically the opening print, is now losing on that potential trade, right? Anybody who's short dead on the lows is losing from that potential trade. And if those traders are going to stop out, what does that do? It adds buying pressure to the market. So if short-term momentum shorts are out of the market and not continuing to apply downward pressure down here, then what does that leave as the natural progression, considering that we're in a daily uptrend? Well, breaking through these highs should close the gap overhead, and once again, that's at 592.75. So a top watch for tomorrow's session early on is like, even if we don't just get straight up continuation to the upside, any sort of higher low over the midpoint, we could probably come in here and build an argument for something around, 587.50. Not to get too level happy. We are getting a little bit level happy here inside of this balance range. So let's knock this one back a little bit. We can come in here, and I honestly would just remove this considering the way that we've reacted on today's session. But if we could stay over 587.50 for a higher low, something that looks like this, now we start to build out what? Ascending triangle through the apex of that, and we're starting to talk about that gap close once again into 592.75. So the evidence I can see would support the thesis that, okay, we dodged a bullet, the market did not break down through the bottom end of the gap, we are not continuing to close the election gap, buyers clearly responded, sellers are weak. A higher low that persists looks good to continue the bull thesis, or even anything over 590.25 looks good to continue the bull thesis into 592.75. Now, when we get to that level, I do think it's worth reminding ourselves that, hey, if we go for a gap fill reversal up against this as overhead supply, so let's just say the chart starts looking something like this, and if we then accept back below 590.25, so how does this play out? Let me play devil's advocate here for all the sellers, all the shorts who want the market to go to zero. What you need for this market to flip bearish is you need a gap fill reversal here, and then what I would prefer to see is a lower high back underneath 590.25. Why is that the key? Because now all of a sudden, it's not just a gap fill reversal, it's not just a daily lower high, but it's a look above and fail on this balance range, right? A lower high here would then start to target the bottom end of the balance, which is closer to the top end of what remains from the election gap, which is at 583.85. So this is what the bears want to see right here. The bulls want to see either a higher low persist, this gap to close, a higher low above, and then continuation towards that all-time high. That would be the bullish path here, which to me seems more reasonable considering everything we've talked about so far in today's analysis. Let's quickly throw on the intraday anchored view app, see what else we can learn from this perspective. Notice that the anchored view app from the Friday gap down of last week is clustered right here along with this anchored view app, and that is Confluence at that 587.50 that we just actually updated on the chart together, so reinforcing that level there. These two anchored view apps are still near the gap fill reversal level at 592.75, so please keep that in mind as a target if you're trying to trade scalp longs intraday into that level. I would take at least, maybe not at least, but I would start thinking about trimming half the position, 3/4 of the position, depending on how strong other components of the broad market are, thinking about being a profit taker there, monitoring for continuation. If we get it, great, but if we reverse, at least you've locked up some of the profit on that potential breakout trade through the gap structure. To the downside, like way to the downside, and this is coming from the previous all-time high, notice that the anchored view app there is actually becoming just better confluence literally with the previous all-time high, which is at that 586 level. So still supporting the idea that if we're in this balance range, the buyers still have an edge. Right, buyers still have an edge if we're holding up in this zone. Let's take a look for some more supporting evidence. And of course, this one I think should be fairly straightforward. And I think we addressed it a little bit on the daily chart. But if we do get something that looks like this, consolidation here, and then the break lower high underneath, of course, I'll continue to entertain the possibility of the election gap closing that would require a lower high on the hourly chart underneath 583.85. If that takes place, yes, we will trade more aggressive downside. Let's take a look over at the market internals. If you're not familiar with this dashboard, check out the video tutorial in the top right-hand corner. For the most part, we've had pretty neutral volume flows on the week. If you take a look at the weekly net number, we're at 215. It's not really substantial. We're looking at plus or minus 500 million on the week, and we're not even halfway there yet on Wednesday, so that's not really all that informative. The advanced decline line, I think, helps support the idea that on Tuesday, the sellers failed. I mean, they opened very close to trend lower zone on the advanced decliner and were unable to push underneath into, negative 1500, negative 2000. Instead, we closed near the zero line, right? On today's session, as the market ramps into the afternoon, we close back up near the zero line as well. And during the liquidation break, just ask yourself the question, was there any substantial time spent in trend lower zone? To me, the answer is not really. Now, I'm not going to sit here and argue that the market's like full-blown bullish. I'm just trying to illustrate that it doesn't really seem like we have new sellers, which is important on that Tuesday gap down, and of course today during the liquidation break. The most bearish thing that I could say about today's activity is really coming from this as the cumulative build on the tick. I mean, it did get been close to substantial during some points during today's session, down around negative 3,300. Substantial is negative 5,000, but it didn't really close down there. Again, the market closed where it closed, near the highs back up towards the opening print from today's session. So I don't think we want to just use one data point to say, oh my goodness, that's it, the market's going to zero, it's going to crash, right? It's not the most bullish prints I've ever seen here. However, just to me, doesn't really feel like we have new money sellers. New money sellers would not act like this on the morning session. New money sellers let the market ebb and flow, right? They're sitting there trying to get a tag up at VWAP because they need to beat the VWAP for their client, right? Think about a big trade desk, tell them to fill an order. If you don't get better than the average price, you're gone, right? So this is liquidation break. This is emotional. This is panic. This is not new money selling. It's not characteristic of what we would call the OTF, other time frame players selling the market off in a big aggressive way. If we take a look at the market profile, what else might we glean from this? Generally speaking, value on today's session is still technically lower in the profile. It did not migrate higher with the close up here, but you could interpret this two ways. Number one is just that, okay, this is a Fugazi. The market's going to roll over here into tomorrow's session. I don't really think I would interpret it that way, considering what we've just seen from the market internals and that we don't really have new aggressive sellers. To me, if new money buyers were getting involved, they've actually lowered their basis in this overall range that the market's trading in. Instead of the point of control here and getting positions towards the top end, they're actually better positioned near the bottom end, which means that you're probably not going to get strong downside unless we actually start closing the gap, or the election gap, I should say, the downside gap. If we actually start taking out the low here, taking out the low here, then fine. These traders are probably starting to feel a little bit of pain. But if we're just pulling back off the top end of the range, these traders still feel absolutely fine. So as long as we're over value, as long as we're over this point of control, I think we're okay here from a market profile perspective. And once again, if you're not familiar with this type of chart, check out the video tutorial in the top right-hand corner. Let's jump back on over to the platform here and take a look at the QQQ Nasty NASDAQ 100. See what's going on from this perspective on the daily time frame chart. Thank you guys for bearing with my nasally voice this week. It's been one heck of a ride. Daily chart is very similar to the S&P 500, if I'm being honest. The only difference is that it's not really over the previous all-time high. But generally speaking, what's the structure, right? This is what matters. You've got yourself still the opportunity for a higher low. Notice the difference here that on Monday, Tuesday, and today's Wednesday session, we did not even come close to testing the Friday low of last week. So automatically on the hourly chart, I'll point this out in a minute, but it is a higher low technically. I'd still call for this being a 4-day balance range. And we have all these equal high closes. We still have that overhead gap, just like the structure in the S&P 500. So generally speaking, it's very similar, but not quite the same, still technically underneath that previous all-time high in the NASDAQ. So what's the game plan here? Rinse and repeat, right? If we can consolidate in the upper third of the range, Brigade bolts into the overhead gap, fantastic. Looking to trade from 503.25 into 508.25 is the gap close. Just like in the S&P, that's actually... We're all set here on the daily, right? We know it's very similar. We know that the trend is still technically up on the NASDAQ. We could take a look at the daily 20 SMA, see if you're getting confluence here. Notice that we only closed Friday underneath. Technically, Monday closes above, Tuesday's above, today's Wednesday session is above as well. In the after hours, we're trading around 502 flat, which is above the 20 SMA close from today, which is $500.66, as you can see here in orange. So NVIDIA earnings are not putting the pressure on markets to the downside here, although I do have a trick up my sleeve that I need to tell you about as we get to NVIDIA's chart in just a moment. So daily chart's all set. We know the uptrend's intact. We have a 4-day balance. Great. Let's take it on down to the hourly chart, where we can start to see with a little bit more detail what the pathing might start to look like. So like the S&P 500, consolidation up here is great. Brigade bolt, awesome. This is your target. I would start to become a profit taker as we approach 508.25. If we reverse off of this and get a lower high underneath, just like the S&P 500, look above and fail, failed breakout, daily lower high starts to become more concerning. We'll talk about it on Saturday if this plays out over time. If we can get a higher low here instead, so I'll use a green crayon, right? If this can play out as a higher low on the retest of the top end of the range, this would be a place where I'm looking for long. So if we can visibly spot buyers, if there's a break to close the gap, we pull back and retest 503.25, my first thought here would be, can I find buyers and can I participate back up to the equal high, if not follow through for a move towards the all-time high? 514.85 is the level here. It's a little shy of the true all-time high. The overnight all-time high, if you want to really split hairs with me, is at 516.69. So that would be your upside. And of course, if we use red would come in right here for the look above and fail, targeting 494.50. So that's that. If the market just ends up chopping around inside of this range doing this, I really would just, to be honest with you, it's in a balance range, the midpoint of that balance range. You know what we say, don't exchange in the range, don't enter in the center, cover the kids' ears. We say don't diddle in the middle. Right? So not really interested in between $500.50 and $497.50. If we're just in here, I'm not at all thrilled. The slight discrepancy, as we talked about on the daily, is the fact that we do have hourly higher lows, 1, 2, 3, all above Friday's low. So because all three of these lows are very precise and equal at $497.50, it might be worth entertaining a premature short, something that looks like this if the market's chopping around in here and then can brigade bolt underneath. You could try to spell out risk reward for something like this. Risk, we want a rectangle, please. Risk in this box, reward in this box on the short side to close what remains of the election gap. That would be down towards 492.50. Your daily 50 SMA is going to meet you there as well. At that point, you would be underneath the daily 20 SMA. We just talked about how that was around $500.66. So you'd be underneath that. You're probably talking about more of a bearish trend change if this takes place, but it is a tradable opportunity that I would at least want you to be aware of, considering the equal nature of these lows over here. All right. Anything underneath this daily higher low line in the sand? Yeah, again, like I said, you have to reevaluate. It starts to suggest more of a meaningful trend change, in which case the market may be in store for either a stronger weekly pullback or stagnation on the daily time frame chart. I don't know about a full-blown downtrend yet, but we'll take that one step at a time. Primary reason for saying something like that is just because we know that back here on the NASDAQ, right, although you might not technically be holding this ideal spot, you're just in a choppy balance range, right? You had highs, higher highs. You technically had lows, lower lows, lower lows. It's more of a broadening formation than anything else, so I wouldn't call it a clean trend to the downside. I wouldn't be ready to call it a firm reversal. All the bears are probably salivating, saying, no, Matt, this is, of course, going to turn into this, left, head, right, shoulder, one step at a time, right? One step at a time. We'll tackle that when and if it presents itself. As of right now, markets are still, in my belief, bullish until proven otherwise, and this has been the thesis for a week and a half at this point, right? We were trying to buy these higher low pullbacks. We've done a good job of that in the long-term account. A little sloppy intraday. I'd say that, Tuesday's Amazon trade was one of the better trades. Today, a little bit sloppy, but anyways, Anchored View App Cluster, what do we see? What can we learn? Not a whole lot. Just, again, probably choppy, sloppy in here. If we start to drop it, maybe more of that short trade unfolds under the equal lows. You're under the entire cluster. If we start to move into the gap overhead, you do have to contend with these sort of in no man's land in the midpoint of that gap. Let's take it on over to the NASDAQ market internals, see what's going on from that perspective. And we can see over here, let's firstly evaluate just today's session, right, with the bearish liquidation break off. The open volume flow is not supportive. Advanced decline line didn't get into trend lower zone. Cumulative tick, a little bit red here, but not nearly as bad as Friday from last week, which, honestly, the opening move was similar in nature, similar in magnitude to the opening move of what we had on that Friday session. Anyways, it just didn't really continue into the afternoon. And of course, we know we got that ramp. So market internals don't support more of that big bearish, new money seller getting active in the market. It's liquidation break. It's emotional at this scale as well. Very similar to the S&P 500. NASDAQ market profile for the NQ. You can see that the value area is lower in the session. It's maybe a little bit more midpoint than lower relative to the ES. But what I would point out here is the poor high that persisted from the Tuesday rally. If we could take that out, and that's, fairly close to the high of day from today's session as well, over 20,800. I think you start to see this thing creep back up into the gap overhead, of course. That's where breakout buyers start to feel pretty good. From there, it would be a retest higher low, hold above, wanting to avoid the look above and fail, right? We just talked about this on the QQQ hourly. So all set makes sense with the value area, again, lower, giving the longs a better opportunity. It's better positioning for the longs in the market. There's no major topping tail here. There is decent excess to the lows. We repaired this lack of material excess. So if anything, I'd actually say that the repair of the lows actually looks better. If we quickly go back to the ES, did we have the same thing here? We just had a decent excess low here and a decent excess low here. Not much to really talk about. It definitely repairs what we had going on from this Friday of last week. Anyhow, jumping on over to the Rusty Russell small caps, do they hold the key? Let's take a look together at what's going on with the smalls. There's honestly an even better, and I would argue more bullish pattern unfolding here, where the market gapped down. So hold on, Matt. Take it one step at a time. What's the classic run through, right? We got to talk about trend first. If lows, higher lows, higher lows, possibility for higher lows still. Remember that we wanted market to respect this previous pivot high at 227, and so far it's doing a pretty darn good job of doing that. Now, what I started to say was the gap down on Tuesday was way more meaningful than what we had in the NASDAQ and the S&P because it also took out the low of Friday from last week. And what that would suggest is that there's an even better opportunity for a gap fill reversal to keep the sellers in control. And also, if the sellers were going to run away with this, reject that 227 I was just describing. That's why we needed to talk about trend first and why 227 is so important. So the fact that the market opened underneath, did not have any troubles rallying to close back up near the Monday high, and you will see this as an intraday level as well from Friday. And then on today's session, we use this as support to form a higher low. What do you think the hourly time frame chart looks like? Well, it's a good thing we have one right here. Let's take a look. I don't know about you, but this is screaming inverted head and shoulders over the neckline here, and we are looking for some upside rotation through the thin structure during the breakdown. So as long as small caps can stay over 230.15, and the saving grace here is also if NVIDIA earnings end up turning into a huge flop, if the Asia market opens up overnight here and responds poorly to NVIDIA's earnings and sells it off, guess what? Small caps are not going to be as influenced by that move. So generally speaking, over 230.15 would act as a positive bullish tailwind for the S&P 500. Watching that very closely here, 230.15 on the IWM hourly time frame chart. If we're above, bullish. If we're below, I'd be more neutral for consolidation here. I wouldn't be bearish until we're underneath with a lower high, this key level, right? We can see that the shoulders are fairly equal from that, inverted head and shoulders pattern. That's 227.80, a hair above our 227 daily line in the sand for that higher low that we were really looking for to emerge there. So all set. The chart pattern does seem to be, once again, more suggestive of upside in the tank. This level should be respected at 232.75, but I wouldn't call it an end of the world level. Notice how the market didn't, there was a little stutter step there, but it's not like we built out a multi-day low or a multi-day high that had come back up and rejected that level. So to me, this honestly could even just, we might end up having to do something like this here in real time just to back that level off in terms of its strength just a little bit. We're really talking more about a thin structure retracement back up towards that 236 being the ultimate target. So please, respect it, but it's not the end-all be-all level. That's my opinion, at least at 232.75. With that, we can quickly throw on the intraday anchored VWAP, see what's going on here. We've got some VWAPs barreling down on it, so maybe if we get better confluence, that'll be interesting. But as long as we're supporting over the Friday move lower from last week, as long as we're supporting over the anchored VWAP from back over yonder, it's this one back here. There it is, that one. That, which is this anchored VWAP right here, we're over those shoulders. We're sort of good to go in terms of looking for it. Even if say you're like, Matt, you know what? I don't really believe in this move. Well, at least be open-minded for a counter trend move, right? Markets don't move in a straight line. Even if this rallies and let's say it rejects up here for a lower high, that is totally reasonable. And you could come to me with the argument of, hey, it's just a daily lower high. Fine. I could buy into that thesis. But as of right now, even a counter trend move seems reasonable considering that the market is stalling out and trying to get some acceptance over that neckline break, 230.15, as we've just called out. Let's take a look at the market internals for the Rusty Russell side of the indices. And we could see volume inflows. Again, nothing stellar, nothing major, but still in instead of out as we're building out this bottom. You can see that the advanced decline line rallies away from trend lower zone on Tuesday, which is that gap down day, which is the perfect opportunity for the sellers. The cumulative build actually closes positive on Tuesday versus today's session, closing a little bit more negative, but once again, nothing where we're going to write home and say, oh my goodness, look out below, markets are bearish. If we take a look at the Rusty Russell profile, notice single prints here, decent excess at the lows, right? You had that liquidation break, emotional. Was there any volume commitment down here? No. Beautiful volume taper, no poor low, great excess. That's the proper end of the auction there, and it is supportive once again over this key area. So this is making sense. I like this. I like the fact that the, of course, point of control did migrate higher with price value is higher here. But, what does that mean? Generally, it would signal more so price acceptance around this level. So if we break out, awesome. You would just want to see that retest level hold. If we never break out and we start to take out these lows, then yeah, inverse the analysis that we've conducted on the ES and say, hey, buyers are actually trapped from really poor location underneath these lows, gets pretty dangerous, and we're probably talking about a more firm reversal to the downside. Maybe from that perspective, you might consider this more of bear flag consolidation. If I just do something along these lines, like you have bear flag, something along those lines, if you crack the lows, yeah, maybe there's overhead supply that can weigh into it. But for now, I would say the breakout is the first watch out of small caps, which, as we know, is a bullish tailwind for the S&P 500. Let's move along and take a look at the sectors for the S&P 500, firstly beginning with the weekly performance of those sectors. Who was leading, who was losing, and where was the weight? We've got communications up 0.05%. We've got utilities up 1.65 and real estate up 1.59. At the bottom end of the barrel, it's financial sector down 74 basis points, discretionary 64 basis points, industrials, the only red sector on the week, the only other red sector on the week, down 10 basis points there. If we're looking for the heavyweight components, it's the XLK, of course, up 106 basis points, so 1.06%. Not bad. Not bad. But keep in mind, the market's just balancing here. It's not making an aggressive attempt towards new all-time highs just yet. So for now, not concerned with any sort of posture issues that we might be considerate of. For now, the XLC is near the all-time highs. There's nothing bearish to say about this. You have lows, higher lows. We're moving along. If we take a look at utilities, the most bond-like sector is sort of playing catch-up here. So is there a possible rotation as the market goes sideways? We know that there was some previous pain in utilities. Catching back up, sure, fine, not an issue. Markets are not pushing to new all-time highs yet. We're not seeing leadership from utilities. Real estate, really more so stagnant than anything else. If it makes a new pivot low, we will be concerned. We're not there yet. Semiconductors, spotlight, here we go. This, of course, will be moving on the NVIDIA earnings announcement. As of right now in the post-market, 241.55 by 242.19.18. There it is. A little bit spready out of SMH in the after hours. But what does that mean? Where is it? Well, it's technically right here near the close of today's session. For now, it's still a 4-day balance range, very similar to the broad market itself, but I would be watching very closely here to see if we can start closing some of the gap overhead and starting to get price acceptance back over 245. If you're a market bull, this is a very important step for the market to continue its advance in the upward direction. If this just continues to consolidate sideways, we've already moved the goalpost a number of times over on the SMH. The fact that we're underneath this balance range, it's not the best indication. Like, you have to call it the way it is. It's not the best indication. The only saving grace is that we're balancing over the daily 200. NVIDIA earnings were not a massive flop, although we sort of we didn't get this big euphoric break to the upside. It's not gapping up, 10 handles for a huge, massive payday for Jensen. But generally speaking, it's also not tanking, right? So just sort of at the expectations, beating the expectations by a little bit. The bar was set very high, right? You're not really getting any substantial sell side yet in NVIDIA. We'll see. And once again, I do have a trick up my sleeve for NVIDIA. Be patient until we get to that chart, all right? I promise it's worth listening to. So if we do this, awesome. If we just do this, don't hold your breath. And of course, anything under 237, very dangerous for the broad market as a whole. Material sector is the lightest weight sector we have, rebounding off the 200, fine. If it holds 91, no issue. XLK tech sector is inside of that balance. If we're thinking about this relative to what we just saw in semiconductors were like down here. So the fact that the tech sector is in here does strike me as being a little bit more constructive. I want to see continued holds of the daily 50 and ideally get back up and over the 234 mark. So not only just a gap close, you want to actually move through that gap close level at 234 towards the all-time high, right? That's the XLK. Healthcare sector. A little bit of a counter trend move, starting to develop off of that 140.80 after the absolute falling knife move from back here. So still counter trend until proven otherwise, but if this can at least come up, close the gap, if it can retrace something more like 50% of the overall move, if we just come from the top down to the bottom, maybe that's something closer to 145.50. If we can get closer to that area, it would support the idea that as the third heaviest weight sector, yes, it might still be in a downtrend, but at least intra-week, it might help the case for an S&P 500 long. Now, you could make different arguments about, well, this is not healthy for the general nature of the S&P. You could take that up, that's a different time scale of trading. But for now, at least counter trend activity here does strike me as being available for bullish activity into the end of the week. If it rolls over and just sort of slips under 140.80, kiss it goodbye, not going to be all that pretty of a time in the S&P. Energy sector is starting to outperform a little bit here. This is something that we want to keep tabs on. Typically, when energy starts to outperform in a meaningful way, it might start correlating more so with a pullback in the S&P 500. So we did start to breach, and we're holding above this pivot high at 94.25. You could even build, it's sloppy, but it's sort of there. It's like a multi-dimensional, inverted head and shoulders. Maybe it's the neckline up there, but generally over 94.25 does strike me as being bullish for energy. It's decent for like global growth. And of course there's demand here for energy, talking about like data centers, of course. But it's also somewhat inflationary. So you've got this push and pull for the market out of energy. We could take a look at crude. It still remains underneath. I would say for the most part, as long as crude, so CL here, remains underneath that $72 a barrel mark, which is this level here, as long as we're sub that, I wouldn't bring up the inflation story, and I'd start thinking more about stronger growth from the market if energy, the sector itself, is moving higher. Let's take a quick look at bonds. Excuse me. Still under the weather just a little bit, so I do appreciate you guys bearing with me. the market moves on though, right? The market doesn't care if I'm sick or not. The market's going to trade tomorrow. So we got to keep tabs on it. We've got ourselves, more so sideways consolidation. I'm still short puts in TLT, so this is a long enough time scale. It's not really doing anything meaningful that would change my mind here. I would honestly prefer if it did start to move a little bit lower, if rates ticked higher and then snapped back in an aggressive way. That to me would be sort of the way I would like to see this play out. If it does just consolidate and grind up higher, then fine. Over 93, rates will come down, and I would expect that to be more of a bullish indication for the broad market as a whole. So that's your rough TLT analysis. Talked about the spiders, rather XLP, consumer staples. Now it's failing. Sellers are failing underneath 80. So, this is a D for defensive sector. We don't really mind it when it's trending to the downside, but if the sellers are failing, upward pressure is upward pressure. If it rotates to the top end at 81.50, then fine. So be it. Not really an issue for the broad market as a whole. What is pretty interesting is the XLF sector today getting a little bit of a liquidation break to the downside underneath that 49.60. Here it is on the hourly chart. It did happen early in the morning, and the afternoon rally sort of brought us where? Unfortunately, for a retest and potential lower high underneath 49.60. So I'm very open-minded to, if financials fail tomorrow and NVIDIA earnings are just like, nothing burger, lackluster, if financials rotate to the downside, I'm probably not yet ready for a look to break out of the S&P 500 balance range, right? That's if NVIDIA earnings are a flop, nothing really important happens tomorrow, and financials break down. I would be watching that very closely, all right? So XLF under 49.60, top consideration. XLY, what's going on with discretionary? Very precise lows here. This is a little bit of a cliff. Take it down to the hourly. You can see this, right? Here's your cliff. Underneath that level, thin structure down towards the gap close. Not saying it has to happen that way, and ideally this does just continue consolidation here on the daily. We are getting a hammer off of the key area, but these precise lows become mechanical, and if retested, I would expect follow through to the downside. So a pullback here is okay. We know it can support for a higher low around this zone. It's not the end of the world. I would honestly argue a pullback might be healthy for something like XLY. What goes straight up doesn't mean it needs to come straight down, but some sort of give and take from the market. Remember, if you have give and take, if you have a more fluid auction, typically that is going to be more sustainable than something that's just nearly vertical and then comes crashing straight back down, right? So I would like to see a stronger higher low established, not this mechanical 3 equal lows that we were just describing with the cliff off to the left from the hourly. Weird zoom, but we're moving along to industrial, so it doesn't matter. What do we see over here? Looking into the gap, no acceptance back above yet, but I would still be watching 139.15, about 8% of the S&P 500, so not the end of the world if it does or does not go, as long as it holds a higher low over the full gap close. That's mainly what I'm interested in. As long as this can persist here, good to go. If it really starts to accept underneath, now we have this, just like we talked about on the NASDAQ, right? Maybe that over here in industrials. Totally different sector, not as related, but the pattern still applies. So there it is. Let's take a look through the ratio grid. And of course, the main takeaway here from the sectors is just to watch like a hawk the financials, the semiconductors, and tech to see how that continues to play out. That's the story, right? XLK still looks kind of neutral. It's not full-blown risk on. We're not, trending to the upside. Healthcare, not really an issue. This looks great to me. This still looks risk on as the market has sort of pulled back and, XLF is going more so sideways. So if this can persist into the end of the week without breaking down from the structural chart itself that we were just looking at, fantastic. This looks really strong, even as it's been pulling back. No issues there. Staples not aggressively trending. Utilities not aggressively trending. Energy, as we said, is something to continue to keep an eye on over here. If we look at some specialized ratios for risk on and risk off, we are trying to get a higher low out of 1 to 3 year Treasury versus the tech sector, so that's positive and bullish. This is a little bit more of a give back than I would have liked. This sort of would have held at the previous double top highs. It's still technically offering a higher low, and this is utilities, by the way, relative to the XLK tech sector. It's still holding the 50 SMA, but not as ideal as it could have been. So we'll put a check mark here, put more of a squiggly neutral here. This one speaks for itself. Discretionary versus staples continues to look very bullish and risk on. And over here in semiconductors versus healthcare, still okay as well, more of a bullish uptrend than a reversal at that. Emerging markets / foreign markets, we could even think of it that way, really not doing anything overly concerning yet. If it was under 42 now, I'm like, okay, whoa, something bigger is going on that we probably want to pay attention to. We're just not there yet. This is the sort of China stimulus, unwinding it just a little bit. So that's your risk on look. Let's take a quick look at the Dixie continuing to break to the upside. So the main concern I have with the market from a fundamental perspective, we can start talking a little bit more fundamentally when it comes to the dollar, is just that the interest rates, financial conditions with the dollar continuing to push to the upside should not correlate with a market that's also trying to make it back towards all-time highs. A better reversal here in the dollar, back down towards like the midpoint of its balance range, this 104 inflection point, that to me would be the fuel to the fire to continue to press this into new all-time highs. Now, is that going to take place? Well, the key question, there is just, what do you think about interest rates, right? And as of right now, certainly we heard from Powell just the other, Thursday, that he's not really in a rush. Gold relative to the gold relative to the S&P rather, is still underneath some pretty major inflection points. So I'm not seeing a flight to safety unwind and take hold, I should say, in gold. It is rallying here a little bit off of the lows, but until the relative ratio chart actually takes back out these highs, and ignore the, the decimal here, it's not rounding properly, of course, but you get the idea. This previous flat top, if we're underneath that, it's pretty difficult to say that gold is a flight to safety trade right now. Obviously, equities are performing better than gold as this slips back to the downside. So that's not really as much of a big deal. If we look at interest rates, this I think is where the story, it's a little bit hairier and ties more so into the dollar, breaking out to the upside, pressuring financial conditions here, which in theory is downward pressure for markets. But look at the 10-year breaking through the resistance trend line. We talked about 4.3. We talked about the pullback the other day. If the TLT continues to rotate to the downside, closer to that 88.15 level we were just talking about, it probably means interest rates continue their ascent here, and we might be talking about something like 5% on the 10-year yield. Of course, what does that mean for equities? In a classic relationship, it tightens up financial conditions. The PE multiple should contract, not expand, which is inverse to what it's doing right now, which is a massive head scratcher. So huge disjoint from a fundamental perspective. But regardless, these are the charts that we're dealing with, right? This is literally what's going on here. So that's your 10-year interest rate. Let's take a look at the inverted ZT for the 2-year, sideways as we really sit sort of gridlocked at 60-40 odds for a December 25 basis point cut versus a pause. So speaking of, let's take a look over at the Fed tracker tool, and we can see that as clear as day. Here's your 60-40 odds, basically unchanged. This week has been really, really quiet in terms of, economic data. The only thing that missed was the building permits and housing starts on the Tuesday morning session, which might be a little bit indicative of the cyclical side of the economy slowing down a little bit. Is this really think about this logically, right? What did we just talk about on the 10-year, which is pretty much directly correlated with your 30-year mortgage? I know it sounds weird. Why wouldn't you use the 30-year bond? It's the 10-year, right? So housing starts being down as rates move higher makes sense. Mortgage demand is coming down, right? So that's sort of what's going on with that relationship. There's some Fed speak this week. Again, nothing that's really moving the needle. I'd say that the initial and continuing jobless claims tomorrow morning will be the most important to possibly shift those odds around just a little bit more, and we'll see where they settle out. Remember that we have another labor report and one more CPI report, honestly, prior to the Fed decision on December 18th. A little while to go on that. Let's talk technical. Let's talk fundamental. We'll talk fundamental about, NVIDIA earnings here while we're on the fundamental tangent. What I want to call out on this is just that if you've been paying attention, basically what NVIDIA does is they beat by, and this is revenue, right? They beat by 4 billion every single time. 4 billion, and we have, this is the trailing 12 month, but this month, what did the number come in at? Well, if we take a look, see it over here, 35,000 millions, 35 billion, right? So instead of beating by 4 billion, they actually beat by 5 this go around, which to me, it breaks the trend, but I think it brings into sort of consideration the law of large numbers, right? As you continue this, what was a pretty stable $4 billion beat, and the numbers get larger and larger and larger, what does the growth story look like from a percentage point standpoint when it comes to investors saying, hey, is the growth story still alive? Obviously, it diminishes when you're talking about law of large numbers, and it just becomes even increasingly more difficult to beat what you've just done. So generally, that's, I think, what the concern is here for NVIDIA. So although, yes, there was a beat across the board, I think that investors are somewhat, as the percentage gain here is maybe sort of top of mind, becomes more of the story, right? The percentage gain is no longer as impressive. It's like, okay, instead of beating, 30% plus on the quarter over quarter, it's slowing down to 17, which, don't get me wrong, it's still good numbers. I'm not trying to say that NVIDIA's report was bad. I'm not at all. I'm just saying that investors are maybe skeptical, right? Because at a certain point, NVIDIA trades on the expectation of future growth. And if future growth starts to slow down, then the stock price should slow down because investors will be paying less, or they're willing to pay less for that future growth. Excuse me. So here is your 78 cents on the EPS as well. Decent little move there, up 16% relative to the prior quarter. As we look forward to the end of the week, and also a big beat here is Snowflake. Snowflake, ding, ding, ding. That's actually gapping up in a big way. I did not look at Palo Alto yet, but we can look at these charts in just a second. Anyways, earnings for the rest of the week. Anything interesting to pay attention to? The answer is absolutely not. Nothing I'm really interested in over here. So with that, we'll get back on over to the charts. We'll take a look through the remainder of the risk appetite sections, and then we'll take a look at the earnings chart. So here we go. TLT ratioed is a non-issue. Risk on still for the market. Bonds are still saying, hey, we're skeptical of wave 2 inflation as they go sideways over here relative to the shorter durations. As we look at credit spreads, they continue to say, still risk on, no issues. We're still in a downtrend. Remember, there can be give and take over here. Generally speaking, you're still in a downtrend. You're coming from the lowest low, trying to set a lower high, Not an issue, and credit spreads are not signaling a credit event. If we look at high-yield junk bonds, you can see that we do have still a little bit of a divergence playing out just relative to, actually, I suppose, my apologies here, folks. I apologize. If we take a look from here to here into today's close versus from here to here into the afternoon, I think you get a little bit of a bullish divergence even out of what's going on with junk bonds up top. So there you have it. Junk bonds have really lit the way over the last little bit. This was the first major divergence near the highs leading to the Friday gap down from last week. So I would take this in stride and sort of, I don't want to run with it too much because still you have not taken out this high. It'd be ideal if this sort of makes an advance to here. This makes an advance to here in lockstep. That would confirm the move. If it doesn't, it starts to raise some questions. But junk bonds, I like this. I like that little trend line we just put in there. Let's take a look at the Bitcoin chart. Really pushing it today with the voice. We're seeing it advance. We have new record highs out of Bitcoin. The Saylor shift ratio continues to fire off. Michael Saylor is just absolutely, he's the man right now. If you take a look over at MSTR, Matt, if I could spell it, there you go. Michael Saylor. I actually saw him not too long ago. It's probably just a hair over a month ago. I actually saw him walking by downtown, by the waterfront. Very, very cool experience. But he's been paid. He's been paid. The Bitcoin man has been paid, moving from 150 up to about 500 at the peak of today's trading session. Bitcoin breaking out the new record highs. And of course, what's the big news with MicroStrategy? I think they increased the amount of, don't quote me on convertible or non-convertible bonds, but generally they're raising more money to go out and buy more Bitcoin. That's the bottom line up front, right? So I don't remember exactly what they raised it from and to. I think we could probably pull this up actually as I'm sort of realizing I'm ranting a little bit here unprepared for you. But if we take a look, there it is, 2.6 billion, right? So from 1.75 billion to 2.6 billion, all of that. So basically another $1 billion directly into Bitcoin on the balance sheet is primarily what investors are expecting. So that big news caused the rally today. Obviously, this trades at a premium to Bitcoin itself. This is the pure play over here. MicroStrategy is absolutely a leveraged version of that. Let's move along from Bitcoin. Basically, what's the premise? Bottom line, right? We talked about the premise of Saylor buying more Bitcoin. What does it mean as people are coming into Bitcoin? Risk on environment for general financial markets. Michael Saylor to present to Microsoft on adding Bitcoin to the balance sheet. People want a piece of the pie. If this gets widespread adoption, on balance sheets, then I think you can only imagine where it goes from there as we're starting to talk about companies with billions of dollars pouring into the coin. All right, so that is Bitcoin. That is, maybe a little bit of a bull thesis there. Let's take a look at total breadth. Contracting a little bit on the moving averages here, mainly just the 50 SMA, kind of flat on the 200, and the new highs versus lows getting an uptick. RSP will agree or disagree? Agree. I think we're all right here as long as we can hold up over this 179.35. We had talked about that in the past. That is a little bit more of the election gap close than what we have on the weighted down below. The QQQE, the weighted NASDAQ, and the non-weighted are pretty similar, honestly. It looks to me as though there's a little bit of a bullish divergence here in the weighted versus the non-weighted being a little bit more equal to the level, at least. If you just compare back to this, kind of traded closer versus what we have going on in the weighted. What does it mean? It just means that your NVIDIA, obviously rallying up towards those record highs prior to the earnings day and what we had yesterday, it generally is putting more pressure on this to the upside. So not a huge tell there. Industrials versus transports pulling back in tandem. You love to see it. No issues there. Let's move along into volatility. We are holding up over the 15 handle on the VIX. I would tend to think that this should settle down over time. Now that the election is behind us, and that was this big gap down over here, seems to me that this wants to settle down even further. I get it as the market pulled back here a little bit on Jerome Powell's commentary, but for the most part, I think that most things are status quo. NVIDIA earnings are in the rearview mirror. I would expect this does contract a little bit unless there is some sort of negative response through the Asia session overnight. If you look at the VVIX, it is rejecting this area. So once again, it's not a classic analysis, but mean reversion back down towards 75 does look like it's trying to spot more of that mean reversion style move to the downside. That's bullish for equities. If we look at VIX futures, back into a stronger contango out of a little bit of a panic move back here, but all set. Increase in one-day implied volatility on the VIX one day. I would imagine that this comes down after NVIDIA earnings sort of settle out here. There's really not much on this front that I believe is overly concerning from a vol perspective. And we saw credit spreads also sort of staying in that downtrend, right? If credit spreads expanded, I would expect volatility to increase, and that's just not what we have right now. So in terms of Apple, let's get into the core list of companies here. I did say we were going to look at some earnings names first, didn't I? Let's do that together, and you can hold me accountable. Snowflake is up first. Let's drop this over let's go to this split screen over here so we can get some pre-market and post-market data. Snowflake is what we want. Massive move to the upside on Snowflake. So on the daily chart, recall that we had been talking about, this was a swing idea, lows, higher lows, building out a little bit of a base over the neckline here, higher low, huge move higher on earnings, obviously. So gapping up to around 154.65. We'll go round numbers only on that. Of course, it'll change by the time the bell rings tomorrow. But what does it mean? Huge gap up. I wouldn't expect it all to close in one day. If this can pull back and support over 143.75, this prior pivot high, that would make a lot of sense to me. If it continues to drift beyond that, I would just take it one step at a time. Where is the higher low to get involved in? Generally speaking, I think that this is sort of a long-term bottoming formation on the stock for Snowflake. So looking for bullish entries here as, think about the future of where this is going, right? Snowflake in the cloud. Excuse me. My apologies. I'm just going to keep moving along. It's for the sake of time. Palo Alto, PANW, down, gapping down. I told you I didn't look at this chart, and it is actually gapping down into the gap. So not as interested in this one versus Snowflake. I think Snowflake is the better contender here versus Palo Alto. And of course, NVIDIA. Let's talk about NVIDIA right now instead of waiting to get to the third company in. So NVIDIA, as you can see, and we talked about this in the introduction, right? First initial reaction was to the downside, even though it beat expectations on both revenue and the earnings, EPS, and then rallied back to the upside on guidance during the actual conference call where the CFO was speaking. And of course, there was some Q&A that Jensen hosted and responded quite favorably to what he thinks the pipeline is going forward. So unchanged, basically back inside the prior day's range. But what I wanted to tell you about, what the trick I had up my sleeve, is if we look over at the trade tab, and we talked about this on Saturday, you can see that the open interest here, it actually increased to 189,000 contracts at the 150 strike. And if the market, I shouldn't say the market, but if NVIDIA is not going to take out 150 for the open tomorrow morning, what do you think this means for market makers? So put yourself in the shoes of a market maker, right? Most market makers are selling options to retail here. Maybe there's some hedges that are people are buying 150 calls, but anybody who's directionally long 150 calls is likely using that as some sort of bet on earnings, right? So market makers are selling these things. They need to write the contracts, right? So to neutralize their delta, because market makers try not to have a directional bias, right? To neutralize their delta, they're technically net short delta because they are short calls, meaning that every dollar that it goes up, that NVIDIA... Every dollar NVIDIA goes up, they're technically losing money, right? Whatever this delta is right here, 38 cents per contract. So that's happening, and they need to neutralize and offset that by doing what? Going out and buying 100 shares per every contract that they've sold to get to neutral delta. So if these contracts are ultimately going to expire worthless, and as options writers, right, that's basically what they want anyways, those market makers. So great, they collect the total premium, but now they're just long a bunch of stock. And once again, if market makers, their objective is not to be directionally biased on whatever it is, it's just to provide liquidity and take the money in between the spread. If that's their objective, then what are they going to do with that stock? It means it's going to come for sale. So all of this stock coming for sale is the only bearish thesis and narrative I can see just from a pure play mechanical perspective on NVIDIA. It doesn't have anything to do with its valuation. I'm not saying earnings were a big flop. I'm not saying any of that. I'm just talking about the technical mechanic of this at 150 and stock coming for sale. If a bunch of stock needs to be sold, what does that mean for the chart? Downward pressure, right? So anyways, let's get on over to, we know that it's basically opening unchanged inside the prior day's range. Let's get back on over to this view here, and we will take it over to NVIDIA. We'll zoom in, and what are the technical levels? So, if it's underneath, if it's just consolidating in here, and keep in mind that the more likely forecast open is there. If we're consolidating up here, then I think those market makers hold on until, and possibly watch for the breach of 150. If we end up slipping beneath 144.50, that's where I think more stock comes for sale. Market makers start dumping this thing. Those calls will expire worthless, and we probably get a rotation to the downside. Again, does the chart look like it's ready to slip into a big bearish downtrend? Is it going to crash from the lows? No, but I would be open-minded to some sellers stepping up in here, and pushing price to at least test 137.25, if not daily 50 SMA, down around 133. So that's my take on NVIDIA. Maybe that's useful for you. Maybe it's not. You can let me know down below in the comments section. I'm trying to be better about blocking the bots so we can actually have a conversation down there. It's almost insufferable, but trying to get better at that. We used to be really good, but it slipped away a little bit. Apple, if it's over 229.50, I think there's a trade to have here. If not, I would sort of just put it on the back burner and say it's going to consolidate out in this range, tangled up near the daily 50. For shorts, you got to show me a lower high under 223.75. Next up, Softy. If they're going to put Bitcoin on the balance sheet, expect it to do this, but as of right now, we do not have that confirmation. A couple of, little bit of consolidation taking place, but what I would point out here is just the inability for the sellers to really push price lower. And it's more so holding up over the top end of this balance here, and we can see this on the hourly chart very clearly. So the top end of the balance, if breached, should have caused a nice clean lower high underneath. We're not all the way there yet, and it's more so just, consolidation. So I think the better trade is to watch for a potential long here over 417.50. If it consolidates out, I would just let it go. I would not try to be aggressively short through and near these lows. Obviously, shorts are not getting paid. Next up, we can take a look at Google. We already looked at NVIDIA, of course. Google is stuck in its daily balance range. It's in the midpoint. What do we say? Don't enter in the center. Don't exchange in the range. Don't diddle in the middle. Next up, Amazon. Amazon continues to hold its previous all-time high, which looks fantastic. Tuesday, this is the trade of the day, and as of right now, it's continuing to hold it, but it's just in the range. So the next setup here, and we've got quite a bit of power lines overhead. You can't really be long from here into here. It doesn't really leave great risk reward, and even if we break out, I don't want to be long into this. I would say the next big trade for Amazon is like consolidation here that then starts to close the gap overhead over 207.35 into 210.85. That would be my watch. If we start to break down underneath the previous all-time high, is there a downside daily target? I'd say yes. Just the top of the gap in this previous little higher low here at 194.25. Next up is Metaverse. What's going on with Zuckerberg in the fantasy land? I would call this, I don't know about you, but I would call this a look below and fail. Great little move on the hourly time frame chart. Let's take a look with a little bit more clarity. If this is a double bottom and this is the neckline, obviously we closed back above. Not the cleanest hold this morning. I was honestly looking for the gap up to go gap fill reversal and support off of that when I was saying earlier in the show, like, hey, things were a little sloppy today. There's not a lot of great holds earlier on in the session, and honestly, ES did not do what I wanted it to do at the previous all-time high on the futures, not the SPY. So anyways, 561. If we can consolidate over it, I think the upside rotation is on. Daily look below and fail, technically speaking, means the target's the top end of the range. We're talking about 599, 600. I don't know that we make it there in one fell swoop, but easily some sort of thin structure retracement here captures my attention. So over 561, risk, reward to the upside. I'm looking for that trade into the end of the week. Tesla, what do we see? It was setting up as a left head inverted, right? You had that headed into today's session. Once again, not a lot of things cooperated with the liquidation break to the downside, but where did we close? In the midpoint of this balance range, technically this to this is a higher low, so call it an ascending triangle now, call it whatever you want. This is the trade I will continue to monitor for, up and over 347 into 358.50. If it breaks down, I'm still interested in the all the way gap close at 325.15. If we test that and support off of it, I would look for risk reward opportunities here, back up to this breakout point. Next up, we have JP Morgan. There's nothing to do, nothing to say here. It's inside still the earnings gap up range. Just is what it is, right? Obviously, a little bit of downward pressure for the S&P 500. So maybe you could say, like, if this breaks and Brigade bolts here, you're at least going to be a little bit more bearish on the S&P 500. And keep in mind how this correlates with the XLF, right? If this continues to rotate there, it probably means, or, vice versa, does the dog wag the tail? Does the wag dog the tail? Right? See what I did there? It's not just the sickness brain. I did that one on purpose. Come on, I got some wits about me. If this breaks down, that's not bad, right? 234.75, bottom end of this. Maybe there's a trade on JP Morgan. It is a slug, though. Netflix, it's got a mind of its own. We had talked about this how many times, and I'm pleased to own this in the long-term account. A little bit of a mind of its own here, a little bit of a mind of its own here, a little bit of a mind of its own post-earnings here, and there it is, mind of its own to brand new all-time highs on a gap fill reversal from today's session. So I don't think you can chase it here as a trade anymore. I would not be a new money buyer up here anymore. I think if you own it in the long term, great. You let those shares do the work for you. If you don't, unfortunately, you've got to wait more patiently for a better entry point here to make the risk reward more so justified. If you own this thing from like, I don't know. When was like doom and gloom for Netflix? When was everybody hating on it? Back here, right? If you were talking about buying this in 2022 down towards the lows at 200 and now it's trading at 883, kudos to you, right? I think I had actually bought some in here, suffered the fate of like, wow, getting smoked on this thing, and then slowly it's been a recovery effort ever since. So happy to own some shares in the long term. But for now, as a trader, I don't think there's much opportunity in Netflix. AMD, you guys let me know in the comments section as well. Maybe we should run another poll in the pre-market prep, but generally speaking, this thing's kind of dead and gone. It's been moving like a snail recently. It doesn't move nearly as well as NVIDIA. Sometimes there are even better opportunities in some select semiconductor things. So I might demote this to the Encore list. I don't know if you guys remember the Encore list, but it's this list over here where we've got, Broadcom, Micron, Palantir, all these other names that they set up occasionally, but they're not nearly as reliable as the Magnificent Seven. Maybe AMD gets demoted back to the Encore list there, but the main premise here is just that we have set the lower high underneath the previous support at 140.75, looking for downside continuation into some of these supports from the left. That's what I've got for you on AMD. It's really not a chart I'm overly interested in trading, but we'll call it for what it is. Brigade Bolt lower high underneath. There it is, right? 137.40. As long as we're below, bears probably have that edge for further downside. All right, I said I had one additional trade idea for you. I do, but it's on my phone, and I wrote it down in a note there. Here we go. Just pulled it up. There we go. RDDT, Reddit. Let's take a look. Brand new all-time high. Well above the IPO opening print. Big IPO base. Massive gap up on earnings. Inside bar, bullish 3-bar play. 139, right? Blue sky territory is above. So I think it's a pretty simple watch. It's just whether or not the trade wants to take place. If we break out through it, again, my personal preference is not to be a breakout trader here. I would prefer to see it go through and spot new money buyers stepping up above, continuing to support the bid in the upward direction. So over 139 with a higher low, and I'm interested in Reddit continuing into blue sky territories. It seems like it's going to be a success story here. It's well outside of the IPO base. It's got a nice bull flag here, you could argue, on the daily time frame chart with a 3-bar play. I like what I'm seeing. You could even talk about this from through the perspective of like, hey, maybe this is some sort of like sloppy double bottom. This is a higher low above it. Technically it's lows, it's higher lows. So no matter how you slice the cake, Reddit looks pretty decent here over 139. Again, looking for new money buyers to step up and support it over that level after a breach. That's what I've got for you in today's episode of the Midweek Market Update. Hopefully you enjoyed that deeper dive through the NVIDIA options play, or at least the influence that options will have over it. And once again, you can let me know down below in the comments if that was useful. I appreciate you sticking through the nasally voice. Hopefully we will be on the mend and better for the Saturday weekend update video. If you learned something new or enjoyed the video, let me know down below in the comments section or by giving the video a very simple thumbs up. We will be live for the remainder of the week. Of course, doing the pre-market prep through the nasally voice on Thursday and Friday, kicking off at 8 a.m. Eastern time here on the channel up in the penthouse. So we'll see you there. With that said, I wish you a green trading week. And as always, I will see you in the next one.